Today, we're diving into a major development shaking global markets. The Federal Reserve is now expected to cut interest rates by 0.25% tomorrow, with a staggering 98% probability according to Polymarket forecasts. This move could have far-reaching effects, especially for crypto and gold investors. In this video, we'll break down what this means for the economy, how different assets might react, and what you should be watching as the news unfolds. Let's start by understanding why this rate cut is such a big deal and what it signals for the broader financial landscape. After months of holding rates high to combat inflation, the Federal Reserve appears ready to restart its monetary easing cycle. This means the central bank is shifting its focus back towards stimulating economic growth. Rate cuts are a classic tool for encouraging borrowing and investment, which can help support businesses and consumers alike. For many, this signals a turning point in policy, suggesting that the Fed believes inflation is under better control and that the economy could benefit from a little extra boost. Rate cut means cheaper capital for everyone. When interest rates fall, it becomes less expensive for businesses to borrow money for expansion, and for consumers to take out loans for homes, cars, or other big purchases. This increased access to affordable credit typically boosts spending and investment across the board. As a result, we often see a positive ripple effect in equities, crypto, and commodities, as more money flows into these markets seeking return. One of the immediate effects of a rate cut is a weaker US dollar. Lower rates make the dollar less attractive to investors seeking yield, often leading to a decline in its value relative to other currencies. This can have a powerful impact on global markets, especially for assets like Bitcoin, Ethereum, and gold. Historically, a weaker dollar has pushed these assets higher, as investors look for alternatives to traditional cash holdings. Right now, the crypto market is buzzing with bullish momentum. Traders are anticipating a fresh wave of liquidity entering the space if the Fed follows through with the rate cut. This optimism is reflected in rising prices and increased trading volumes across major cryptocurrencies. The expectation is that lower rates will not only make borrowing cheaper, but also drive more speculative interest in digital assets. Gold, the classic safe haven, is also poised to benefit from the Fed's expected move. If the rate cut is confirmed, analysts believe gold could test new highs. Lower interest rates reduce the opportunity cost of holding non-yielding assets like gold, making it more attractive to investors seeking stability amid currency fluctuations. This dynamic often leads to increased demand and upward price pressure for gold. US dollar index (DXY) is likely to come under short-term pressure if the Fed cuts rates. Investors may shift capital away from the dollar in search of higher yields elsewhere, further weakening the currency. This scenario tends to benefit risk assets and commodities while making imports more expensive for US consumers. It's a delicate balance that the Fed must manage carefully. US stock markets, including the S&P 500 and Nasdaq, are primed for a potential rally on the back of easing expectations. Lower rates typically make equities more attractive by reducing borrowing costs for companies and increasing the present value of future earnings. Investors are watching closely for signs that the Fed's move will spark renewed optimism and drive stock prices higher. Bitcoin stands to gain significantly from a Fed rate cut. The combination of a weaker dollar and increased liquidity is a classic recipe for bullish price action in BTC. Many traders are positioning themselves for a potential breakout, expecting that lower rates will drive more capital into the crypto market. This could set the stage for a strong upward move in the days following the announcement. Ethereum is also expected to benefit from the Fed's decision, thanks to its positive correlation with both Bitcoin and the broader tech sector. As liquidity flows into risk assets, ETH often rides the wave alongside BTC. The prospect of lower rates could encourage more development and investment in Ethereum-busted projects, further strengthening its position in the market. Altcoins like XRP, SOL, HBAR, and FET are likely to see increased speculative interest if the Fed cuts rates. Lower borrowing costs tend to fuel risk-taking behavior, as investors search for higher returns in less established assets. This environment often leads to sharp price movements and heightened volatility in the altcoin market. While most crypto assets are expected to benefit from the Fed's move, stablecoins and DeFi platforms may see a more neutral impact. Lower rates can compress yields, making these assets slightly less attractive compared to riskier options. However, their role as foundational elements in the crypto ecosystem remains strong, providing stability and liquidity for traders. Tomorrow, all eyes will be on the Federal Open Market Committee (FOMC) statement. Investors are eager to hear not just about the rate cut itself, but also the tone and language used by Fed Chair Jerome Powell. Will he hint at more cuts ahead or signal a cautious approach? The market's reaction will depend heavily on these cues. Another critical aspect of tomorrow's announcement is the Fed's guidance on inflation. Markets want reassurance that inflation is under control, as this will determine how aggressive the Fed can be with future rate cuts. Clear communication on inflation expectations will help set the tone for market sentiment in the weeks ahead. Traders should be prepared for heightened volatility in the crypto market within the first 1 to 2 hours after the Fed's announcement. This is when the bulk of price discovery and reaction typically occurs, as investors digest the news and reposition their portfolios. Quick moves are common, so it's important to stay alert during this window. Rate cuts are a powerful tool for central banks. By lowering the cost of borrowing, they aim to stimulate economic activity and support growth. However, these moves also carry risks such as fueling asset bubbles or weakening the currency too much. Understanding the balance the Fed must strike is key to interpreting market reactions. Polymarket is a decentralized prediction platform where users can bet on the outcomes of real-world events. Its 98% probability for a Fed rate cut reflects the collective wisdom of thousands of traders. This kind of market-based forecasting is increasingly influential as it aggregates diverse opinions and real-time sentiment. When the Fed cuts rates, liquidity tends to increase across financial markets. More money becomes available for investment, which can drive up asset prices. This is especially true for riskier assets like stocks and cryptocurrencies, where investor appetite for returns is high. The relationship between liquidity and price movement is a fundamental concept in market dynamics. Interest rates are the cost of borrowing money set by central banks like the Federal Reserve. When rates are high, borrowing is expensive, which can slow economic activity. When rates are low, borrowing is cheaper, encouraging spending and investment. The Fed's decision to adjust rates is one of its most important tools for managing the economy. Federal Open Market Committee, or FOMC, is the body within the Federal Reserve responsible for setting monetary policy, including interest rates. Their meetings and statements are closely watched by investors around the world as they provide critical guidance on the direction of the U.S. economy. Market reactions to Fed announcements typically unfold in stages. First, there's an immediate response as traders process the headline news. This is followed by a period of adjustment as investors digest the details and implications. Finally, longer-term trends emerge as the market settles into a new equilibrium. Understanding this timeline can help you navigate volatility. Cryptocurrencies are particularly sensitive to changes in monetary policy. Because they're seen as alternatives to traditional currencies, moves that weaken the dollar or increase liquidity often lead to sharp price swings in crypto markets. This makes Fed decisions especially important for digital asset investors. Gold has long been considered a safe haven during times of economic uncertainty. When central banks cut rates and currencies weaken, investors often flock to gold as a store of value. This dynamic is playing out again as markets anticipate the Fed's next move, with gold prices already trending higher. Stock markets respond positively to lower interest rates because they reduce the cost of capital for companies and make equities more attractive relative to bonds. The prospect of a Fed rate cut has already fueled optimism among investors, with many expecting a rally if the move is confirmed. US Dollar Index, or DXY, measures the value of the dollar against a basket of major currencies. When the Fed cuts rates, the DXY often declines as investors seek higher yields elsewhere. This can have ripple effects across global markets, influencing everything from commodity prices to international trade. Lower interest rates tend to encourage speculation in riskier assets, including altcoins. Investors looking for outsized returns may rotate capital into these markets, driving up prices and increasing volatility. This speculative appetite is a hallmark of rate-cutting environments. Stablecoins, which are pegged to fiat currencies, may see their yields compress as rates fall. This makes them less attractive for yield-seeking investors, but their stability and liquidity remain valuable for traders navigating volatile markets. Decentralized finance, DeFi platforms must adapt to changing interest rate environments. Lower rates can reduce returns for lenders but also make borrowing more attractive. This dynamic can shift the balance of supply and demand within DeFi protocols. Fed Chair Jerome Powell's messaging during the FOMC press conference will be closely scrutinized. Investors want clarity on whether more rate cuts are likely and how the Fed views the current economic landscape. Subtle shifts in language can move markets dramatically. The Fed must balance its desire to stimulate growth with the need to keep inflation in check. Too many rate cuts could reignite inflationary pressures, while too few might slow the recovery. This balancing act is at the heart of central banking. The first 1 to 2 hours after the Fed's announcement are critical for crypto traders. This is when the most significant price swings typically occur as the market digests the news and adjusts positions. Staying nimble during this period can make all the difference. A Fed rate cut doesn't just affect U.S. markets. Its influence ripples across the globe, impacting currencies, commodities, and equities in other countries. International investors watch Fed decisions closely as they can shift capital flows worldwide. While gold gets much of the attention, other commodities like silver, oil, and agricultural products can also be affected by rate cuts. Lower rates often boost demand for raw materials as economic activity picks up and investors seek inflation hedges. In anticipation of a rate cut, investors may adjust their portfolios by increasing exposure to equities, crypto, and commodities while reducing holdings in cash or bonds. Diversification and risk management become even more important in volatile environments. While the immediate reaction to a Fed rate cut can be dramatic, it's important to distinguish between short-term volatility and long-term trends. Some assets may spike quickly, only to settle back as the market digests the news. Others may begin new trends that last for months. Despite the optimism, there are always risks to consider. Unexpected inflation, geopolitical tensions, or a shift in Fed policy could quickly change the market outlook. Staying informed and flexible is essential for navigating these uncertainties. Looking back, previous Fed rate cuts have often sparked rallies in both crypto and gold while putting pressure on the dollar. However, each cycle is unique, and past performance is not always a guarantee of future results. Understanding the historical context can help set realistic expectations. After tomorrow's expected rate cut, attention will turn to the Fed's next moves. Will they continue easing or pause to assess the impact? The answers will shape market sentiment and asset prices in the weeks and months ahead. With so much uncertainty, preparing for volatility is crucial. Setting stop losses, diversifying holdings, and staying up to date with news can help manage risk. The more prepared you are, the better you can navigate sudden market swings. To sum up, the Federal Reserve's expected rate cut is set to be a major catalyst for crypto, gold, and global markets. Lower rates mean cheaper borrowing, a weaker dollar, and increased appetite for risk assets. However, staying alert to the Fed's messaging and market reactions will be key to navigating the days ahead. As we wrap up, remember that central bank decisions have wide-ranging effects. Whether you're invested in crypto, gold, stocks, or just watching from the sidelines, understanding the mechanics behind rate cuts can help you make more informed decisions. Stay tuned for tomorrow's announcement and be ready for whatever the markets bring. In fast-moving markets, information is your best ally. Keep an eye on official statements, market data, and expert analysis to stay ahead of the curve. The more you know, the better equipped you'll be to respond to new developments as they happen. The coming days will be pivotal for global markets. As the Fed's decision unfolds, watch for shifts in sentiment and capital flows. Whether the outcome matches expectations or surprises, being proactive and adaptable will help you navigate the evolving landscape. Periods of volatility often create new opportunities for savvy investors. By staying disciplined and focused on your strategy, you can take advantage of price swings and position yourself for long-term success. Remember, preparation and patience are key. In summary, the Federal Reserve's anticipated rate cut is set to reshape the financial landscape. From crypto and gold to stocks and the dollar, every asset class will feel the impact. By understanding the drivers behind these moves and staying informed, you'll be better prepared to navigate whatever comes next in the world of finance.